You're looking at a daily chart of the Nasdaq. Welcome to my daily review. And I just wanted to zoom in here on some of the most recent action as the market in 2023 here. You can see this is January starting right here. And we had this uptrend of about 15%. And on February 2nd, it topped there at 12,269, then gave back half of it, roughly a little more than 7%. Then on Thursday, last Thursday, you can see this bullish engulfing candle here where the Nasdaq traded down to 11,273 and then reversed higher and closed at the high of the session. So that's a reversal candle, and Friday followed through with a nice 2% gain there, 226 points. You can see that this 200, the black 200 simple moving average, the black line here, it's starting to bottom here and it stopped going lower. And that's what you want to see in a market. You know, it's trying to come out of a bear market, or in this bear market, is it just stops going lower. Before it goes higher, it stops going lower. And I'm not saying it's going higher. It might just trade sideways, but it stopped going lower. I mean, with all the negative news and all the, higher inflation in the Fed, higher for longer, blah, 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 it stopped going lower. If I was a short, I'd be really frustrated. They can't push this thing down any further. This has been a nice, sharp move here in 2023. And I wanted to take a look at the S&P because last week it did something significant as well. Very similar to the Nasdaq, where it had a strong January, then gave, half of the gains back, but it came back to the 200 simple moving average, that black line right there. And it held its gains. And it stopped going lower. I mean, this trend has stopped going lower. So maybe it'll resume going lower this spring or this summer, but for now, it stopped going lower. And I just take things one day at a time, and don't try to get too far ahead of myself or make any predictions about what's going to happen. By the way, that's my disclaimer. No predictions. This is for my amusement only. Anyway, Apple today looks similar to the index, right? Big move, then pull back, and now today was up 1.85%. So Apple had a strong day, and I wanted to get to some of these larger cap names. Tesla, the auto manufacturers, it says 88 here on the Marcus Smith, but it's one of the top performing groups in 2023, one of the top 2 or 3. And Tesla's a big reason why this thing came off the lows of 101 and made more than a double. Now it's not giving back a lot of its gains here, which is impressive. It's holding right around the 21 EMA and around that 200 number. So eventually it's got to trade through that downtrending 200, much like the index did. And eventually I believe it will, but it's going to take some time. It's really having trouble at the 200 level, the $200 level. Anyway, Ferrari here. Ferrari, look, this is a nice setup here. If you look at the weekly chart, the ticker symbol is RACE, R-A-C-E. Ferrari, they make high-end automobiles. And you can see this nice cup-shaped pattern. And it's been consolidating for a long time. And that one looks good. And then the other one is Stellantis, another one. You got to look at the weekly charts here. Similar to RACE, where it has this nice symmetrical cup-shaped pattern, and definitely one that I'm interested in. Only 1% off of its 52-week high. So those two look good, and that's a really strong sector. I want to take a look at some of the biotechs. This is Outhouse or Penthouse. So I'm going to take a look at the Sarepta had a drug approval and then gapped higher and is holding its gains. That's 4 or 5 sessions a row right there, where it's getting increasing volume and just trading higher. So that's what you want to see, is the stock gapping higher and holding its gains, or attacking onto those gains. KALA looks like a short squeeze here. This one, I don't know if this is a Reddit stock or a meme stock or whatever, but the stock was up 33% today. So, you got to respect a move like that with that type of volume that it's getting. And the other one was an approval that I was looking at, BBIO, and it got an approval, got good news this morning. I think it was a phase 2, not an approval, positive data in a trial, and that thing gapped higher. So, that's biotech land, 50% in a day with the massive volume. So I'm going to keep my eye on that one. Anyway, that's enough biotech. The semis were strong today, and then they gave it up, much like the Nasdaq. This one was up to 144.90, made a new high, pulled back, and then closed at the low end of its range at the lower 5%. So that's PI. And a lot of our stocks today, I think I had 11 stocks that made new highs today of our top 25 stocks. And 11 is a good percentage, but a lot of them ended up like this, just flat on the session after making new highs, just pulling back. Just caution ahead of Jerome Powell speaking. And then this is Lattice, another one that strong stock, pulling back to its 21, getting support. ACLS, people tell me this is a Ponzi scheme. When it was like about $80, now it's like 130. So this thing's doing all right. Had that big down day last week when or it came way down when Musk was talking about the silicon carbide reductions, and this thing's just holding up its gains, but it found support at its 10 EMA. So those stocks are doing well. There's a ton of semiconductor stocks I can go through, but I'm gonna spare that moment and go to ALIV. This one was in our watch list 2 weeks ago, I believe. And we're talking about this handle here. Sometimes they take a while. This had a 3 weeks tight pattern, and now it's pulling away from its base here and getting a little bit extended there at 3% above its 10 EMA, just kind of moving away from its base. But that one looks good. An OD Freight Lines, Old Dominion Freight Lines. This one looks good to me. If you look at the weekly, big consolidation pattern. This is like a 4 week, a month-long handle here. So I'm definitely interested in this one. Only 7.5% off of its 52-week high. And the other one was ARCB, ARCBest. And you can see the consolidation there forming a handle. And so I'm just keeping my eyes on these. These will be, watch list material. The industrials have been really strong. So, if you're going to have a recession, you don't think these industrials would be doing this well. This is Granger, machinery tool stock, just powering to new highs. I mean, what can you say about that? It just broke out and is going higher. I mean, URI, the same thing, it pulled back a little bit today, less than 1%. But, doing nothing wrong. It's extended a little bit above its 10 EMA. But, if this country was doing that poorly economically, these stocks would not be doing that well. And that's my point. Will Scott Mobile, this one had that, day like like Axon and like ACLS. Looks like a glitch, but this one just pulled back to its 21. It's been moving higher like every day on lighter volume. So I'd like to see more volume come into that one. And then OTIS. OTIS, this is the elevator company. The business is up and down. And today it was down slightly, but you can see how strong these stocks have been. And it's just an indication that, if these industrials and machinery and the metals and mining stocks, they've all been doing really well. And yeah, I wouldn't think that they'd be doing that well if our economy was that bad, right? So this is Valaris. This one did the Debo Samuel move on us, where it just came right down. I chucked it after that sliced its 50, and then it did the Debo cut back, boom. It put the foot in the ground and just drive the other way. And today it gapped higher, 5% move today. And so that's to me, it's like, okay, you give up on it here, you got to get back in if you want an oil and gas stock. Not recommending anything, but yeah, give it up here, get it back there. And that's sometimes what you have to do to be flexible. I like the stock, and if you want to own one in this group, that's not a bad one. This is a field services, Tidewater. This one's just poking along. I made this new high, I believe, after earnings and just kind of going sideways. So doing nothing wrong. And then Weatherford, another one of our stocks, have made a new high today and just trending higher. Not much you can say about that. I wanted to get to the medical stocks today because Dexcom was down a lot. This is on our watch list. And you can see why with the consolidation pattern, but Abbott Labs had an approval, or it was cleared for its glucose monitoring system. And it had a similar move when Apple came out and announced that they had a glucose. So the competition is stiff here, but sometimes these moves 7-8%, that's kind of an opportunity to probably get back near that 120 level, I would imagine. So like an overreaction. Lantheus, another one that I really like, gapped up after earnings, doing nothing wrong. You can see the pattern here. Let's check out the weekly. Yeah, it's just forming this base here. This looks like it's going to be 3 weeks tight this week. We'll see what happens. But it definitely gapped up and holding its gains. So Lantheus definitely has my attention. And TMDX, another one of our leading stocks, it made a new high today and just pulled back, like most of the stocks and the index did. I'm just going to go randomly through some of our leading stocks here at MC Stock Charts. PERI Networks, this is one that had this little flat base pattern. It's not that flat when it comes back down from 35 to 29, but it got support at the 21. Now, had a nice day today, up nearly 3%. With way above average volume here. So PERI is another one that I like. Arista Networks, I guess they had a presentation, I guess at some event, and I guess must have been positive news or new products or something. But it gapped higher and held its gains there. Closing range 36%, but that one looks good to me as well, and definitely watch list material. Duolingo, I don't use this program. I know some people who do, they really like it, but I like what I like more is gapping higher after earnings with heavy volume. Then this little pullback, faked some people out, then went higher again today, nearly a 7% move. So good for those longs there at Duolingo. This is AI. And if you just covered the stock, covered the ticker symbol, and just looked at this thing, you'd have to say that, okay, it corrected like 90% and then, formed a stage 1 base, and now it's trying to break out of a stage 1 base. I know it's AI and I know it's overvalued and blah, 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 but hey, look at all these blue volume bars. Somebody's buying it. That ain't Aunt Sally. So that definitely has my interest as well. First Solar, obviously the one that we have here at the only solar stock we have at MC Stock Charts, and we tossed in phase a while back because it was clear that First Solar was a leader and proved us right here. I don't know, it was back here near 150, and this thing's blasted off to like 212 now. So we've had First Solar on our list for a long, long time, back to last summer. And NXT is another solar stock IPO that I have interest in. It has not undercut the low of 28.51 from its IPO day. So this is a strong IPO, and there are darn few IPOs to track these days. So it makes it a little easier. SMCI, this one, I like this chart. I mentioned that it was a stage 4 base. Some people got confused with Weinstein's stage 4 decline. It's just a stage 4 base, which means that it's, it's been in this Weinstein stage 2 ascent for a long time and had these various bases along the way. And when, like right here, when it undercuts a prior base, it starts a new base. That's stage 1, stage 2, stage 3, and now it's in stage 4. So it's not, I wish Weinstein would have said phase 1, 2, 3, 4, because it's confusing with the stages. And sometimes growth stocks stay in a phase 2 Weinstein for a long, long, long time, like a Shopify or an Apple or something. So this is in a stage 4 base, which means that it's, had a base and then traded higher, formed another base, traded higher. And there you can see the stage 4 base. Anyway, that's it for me today. Thanks for watching. We never give up.